All right, we are live. I will just wait a few seconds as people trickle in before we kick off with today's very exciting webinar. In the meantime, for those of you who are coming in, please feel free to introduce yourself in the chat. Say hello, where you're tuning in from, and remember to switch the message to all attendees so that everyone can see your messages, not just the panelists. All right, well, as people kind of trickle in, I think we can get started in the meantime. So hello, Finimizers, and welcome to another Finimize live event. So my name is Reda. I'm an analyst here at Finimize and hosting today's event on the inevitable future of cryptocurrency with our partner, Archax. So before we dig in, just some quick housekeeping rules. So first of all, like I already said, please feel free to introduce yourself in the chat, say hello, where you're tuning in from, and be sure to switch that message to all attendees so that we can all see it. Second of all, in terms of format, so the way this is going to work is that we're going to have a 15-minute Q&A with our guest today, followed by 15 minutes of audience Q&A. And that takes me to my third and final point. If you have a question for our guest today, please be sure to put it in the question box, in the Q&A box down below in Zoom. Also, if you see a question that you like, please upvote it. That way we can go through the most upvoted questions first, and it's a better use of everyone's time, essentially. So with that out of the way, let's kick off. So our event partner today is Archax, the first ever digital securities exchange regulated by the FCA in London. So founded by experts from traditional capital markets and backed by an accomplished advisory board, Archax offers a credible bridge between the blockchain world and the investment space. And today we're very fortunate to have Graham Rodford with us. Graham is a qualified accountant with over 20 years experience in financial services in both digital asset and traditional markets. He's held several senior operational, finance, and compliance roles in the asset management industry, as well as in the banking space. So first things first, Graham, it's a pleasure to have you with us today. How are you doing?
Yeah, hey Reda, great to be here. Thanks so much for having me. I'm doing well, thank you. Excited to be here.
Absolutely. And, I think it's a very topical, sort of good time to be discussing crypto. Obviously, a lot of headlines these days, the Bitcoin ETFs and so on. And I don't know if you feel it as well, but I just feel like this renewed interest in the crypto space. So yeah, a good time to be discussing this for sure.
It's the perfect time, you're right.
So I have some questions for you and kind of maybe kicking off with something a bit more high level.
Sure.
So if you can just discuss with us some of the biggest trends happening in the crypto world at the moment, and how do you think they will shape the space in the future?
Yeah, no worries. So I guess your comment earlier was probably the right one that these waves come and they're filled with excitement, and every time they come, they bring a new wave of people to the market as well. And with every new wave that comes, I think there's an increasing belief that this space isn't going away. And what we have this time, which is slightly different from all of the other times before, is we have all the institutions coming to the space. So the ETFs are a great example. Across the world, actually, the different jurisdictions have been taking different approaches to cryptocurrencies and digital assets that are regulated as well. And we'll talk about that later. They're increasing at different speeds, but there was a question around how the US was treating it, and with the recent Bitcoin ETF announcements, it's really helped create a buoyant market. I think everyone's realized now that this market is here to stay. So, a base level cryptocurrencies, crypto assets, digital assets, whatever you want to call them, they're not going anywhere. They're going to be here for the rest of our lives unless there's another technological advancement. And then more in the detail, there's a lot of exciting things going on around zero knowledge proofs, decentralization, changing the way existing financial markets work. It's really, really, we're starting to see a big shift in the way this is being used in the world.
Amazing, and I completely agree with that. I think what's really fascinating about the Bitcoin ETFs is that it's really helping drive mainstream adoption of crypto? And kind of related to that, are there any other factors or innovations in the coming years that you think will help drive, adoption even further in the crypto world?
Yeah, I think you, there's always been a huge issue with the perception of cryptocurrencies, and a lot of our perceptions are derived from headlines, which aren't necessarily always presenting the full picture. So for every small issue that there's been around cryptocurrencies, there's been a huge amount of innovation and a huge amount of positivity in what's happening in the space. And I think, in general, it's all leading to just more positivity in terms of what everyone's doing. So the Bitcoin ETFs gave people who weren't able to hold unregulated products access to the space. There are a lot of pension funds, endowments, institutional investors out there who may have been looking at cryptocurrencies and saying, well, I really can't hold cryptocurrencies directly. But the second that you wrap them into a regulated instrument like an ETF, make them traded on regulated exchanges and held by regulated custodians, suddenly you have something that they're able to hold. And once people start holding them, they start to understand them and they start to realize that this isn't just some internet money. This actually is something which is going to change the way that all of financial services operate.
Absolutely, and some really interesting insights there. And you touched on kind of, regulatory product and so on quite a lot. So I just want to maybe touch on regulation a little bit and just how you see the regulatory landscape evolving and affecting crypto adoption and innovation. Perhaps if you can maybe touch on how that's changing in different key regions as well.
Yeah, I think so. Archax set up in 2018 in the UK. So we're the most regulated crypto place in the UK. So we can trade crypto and we can trade regulated securities in digital form. So what that means is whether it's the Aberdeen money market fund or whether it's Vodafone, we can put them on a blockchain and allow them to trade. And the UK has been quite supportive of that. And we're one of a number of regions, I'd say, that would like to be a global digital hub, i.e., the place where future financial services are going to be based. The UK, I mean, we don't always get it right, but actually, we've got quite a forward-looking regulatory framework, I would say. We've seen the same out of places like Singapore, across Europe with Mika. We've seen it in the Middle East, and the US is being quite slow, but I think actually the Bitcoin ETFs were a big step. Everyone's moving cautiously, and again, it's a quite a complex area, the digital one. If you start looking at the technical level, but if you take a step back and say, what is this really? You can simplify everything. This is really just about a technology. It's not necessarily a new asset class. This is a technology. And if regulators approach it in that way, they're actually able to apply a lot of their existing regulations. So in the UK, for example, anything that was a security before is still a security when it's on a blockchain. Just people are calling it a crypto security or a digital security. And I think in the US, they get quite hung up on whether things are securities or not. And that influences how they regulate them. But in the UK, we're kind of saying, okay, if it's a security, whether it's digital or not, it's still regulated in the same way. So I think, regulators are gradually working out that this isn't necessarily a new asset class. This is really something we've already seen before, but it's just taking on a new form.
Yeah, and that probably makes a lot of sense, right? Regardless on whether it's digital or not, it's still the same kind of underlying security. I can completely understand that. I want to switch gears a little bit and touch on something that's been also kind of growing among the central banks and in the central bank world, which is central bank digital currencies. So there's a lot of, I think the majority of central banks are exploring some digital version of their own currency, some of them very early phase, some of them, like in China, have already launched a pilot project and so on. How do you think these central bank digital currencies will impact the cryptocurrency ecosystem?
Yeah, so I guess for your viewers, the way that I think about this whole area generally is in terms of stable coins. If we think of a stable coin, a type of cryptocurrency where, there's a reserve of fiat cash in a bank somewhere, and every token or cryptocurrency represents a unit in the bank. And we have some of those today, like a USDC or a USDT. And what they enable and what we've already seen is the ability to settle transactions on a blockchain. If we want to do a transaction where I exchange a stable coin for your Bitcoin, we can do that real time 24/7 without any intermediaries. It's hugely powerful. We can send payments all over the world in a pretty frictionless way. The problem has been that a lot of those stable coins are issued by entities that people don't necessarily have faith in, that have various levels of scrutiny put on their underlying assets. So one of the advantages of a central bank digital currency is, in theory, you have trust that your token, your digital currency, is backed by a central bank and therefore about as riskless as it gets. So that, that has a lot of positives with it. I would say that it's being slow at the moment. I would say that there is caution from users that they don't want central banks and governments to see every transaction that they're doing with their digital currency that they don't have with current stable coins. And similarly, on the central banking side, this is a technology, and there are things to consider that they've never had to consider before when issuing currencies. So there's kinds of concerns on both sides. So I still think there's a huge gap in the market for a commercial bank digital currency, or a very trusted digital currency. And if you combine with that, one of the other things that we see in the space at the moment, stable coins don't tend to pay yield. Whereas if you invested in something like a money market fund, you might get 5%. So there's also a big gap in the market where people want to hold some form of digital currency, but they want to earn a yield on it. So I think, one of the things we're going to start seeing over this year is more yield-bearing stable coins that aren't issued by central banks, but actually fill some of the gaps that exist today.
Yeah, absolutely. And you touched on a good point on, some trust issues with some of the stable coin providers in the past, especially in light of what happened with Luna and the whole UST kind of blow up. Which sort of takes me to my next question, which is, in light of, these various high profile, let's say blow ups or hacks or scams, that you see quite a lot in the crypto world, unfortunately, what steps do you think the crypto industry should take to enhance security measures and rebuild trust among users?
Yeah, I mean, webinars like this are great. Education's a big piece of it. We do as much as we can to speak to universities, corporates, as many people, and try and educate that this space is big. When you're talking about a technology rather than an asset class, you realize that this technology can touch every asset class and every transaction. And much the same as banking today, transactions can be good, and they can be bad. Actually, a lot of the work that companies do to screen online transactions, a lot of the public nature of the transactions means that they're very traceable, which means people can actually put a lot of automated solutions in place to try and control nefarious activities. But I think regulation has to play a big part in this. I'm a big believer in decentralization, but I'm also quite a big believer in regulation. I don't want to fund crime. However, I think we can use the technology in a clever way. We don't necessarily need to have all of us sending our passports and driving licenses everywhere every time we want to register somewhere. If we can develop an online profile that provides anonymity, or privacy, that we can still send to all of these different platforms in maybe a zero knowledge way, then those sorts of solutions are going to start to play a role in the future financial services.
Yeah, amazing. I'd agree with that. And kind of you touched on earlier, stable coins and earning interest and so forth, which kind of takes us to this realm of decentralized finance, DeFi, which has shown a lot of growth, right, in the crypto space over the past sort of few years. What do you kind of predict for the future of DeFi, and what challenges do you think the sector is going to face going forward?
I mean, we're a centralized venue right now, but we're building a decentralized venue. The future is decentralized, I'm sure of it. Um, excuse me, albeit there might be levels of controls around it. So whether it's who has permission to access a certain asset class, who has permission to place a trade, I think there'll be more control, but people will be free to trade their assets, borrow against their assets, lend their assets. But there's a huge amount of innovation that's taken place in the DeFi space. I'd like to see some of it a bit better regulated. I think there are still a lot of people operating regulated activities in an unregulated way, hiding behind DAOs and various other methods. But in the long term, I think we'll hopefully see a sensible level of regulation that allows DeFi to innovate and make more efficient financial markets, but hopefully getting rid of some of the activities that take place today.
Absolutely. And final question to you before we move on to audience Q&A, which actually reminds me, please, for everyone attending, if you have any questions you want to ask our guests today, feel free to put them in the Q&A box in Zoom, and remember to upvote any questions that you like. So last question, Graham, and again, perhaps more of a high-level one, predicting one, but kind of what do you see? Where do you see the cryptocurrency market going in the next decade, and what do you believe will be the most unexpected change or development that we're going to see?
Um, uh, so, so I guess, I think of cryptocurrencies, particularly as the kind of layer ones, layer twos, blockchains that everyone's building on, rather than necessarily all of the utility tokens. So I think if you believe, as I do, that every asset in the world is moving on chain, that's kind of over a quadrillion of assets that's moving all moving onto a blockchain. Now, if you believe it's moving on to blockchains that I do, as I do, then there has to be a bull case for a lot of those blockchains on which it's being built. So whether it's Ethereum, Hedera, Polygon, Avalanche, whatever it might be, there are a lot of people building into all of these platforms. So, um, I think over the next decade, what you'll see is probably specialisms of cryptocurrency. So, maybe people who use Ripple for payments and Hedera for money market funds. I think that will develop the use case for them. And I think at the same time, you'll start to see all equities, debts, and traditional products also moving onto a blockchain as well. And in 10 years' time, most of our market infrastructure will be heading in that direction.
Very fascinating. Thank you very much, Graham. I want to move over now to audience Q&A. We have quite a few in the box, so I'm just going to get started with the most upvoted one. Comes from Christina. Could you discuss the halving coming up in a few months and its impact on cryptocurrencies or on the larger cryptos, so the Bitcoin halving?
Yeah, I guess it's it would be wrong for me to speculate on what it might do to the price, but I'd say historically it's been pretty bullish for the price whenever the halving happens. And I think if you consider that in this current backdrop where we're having quite a sustained rally at the moment on the back of Bitcoin ETFs, and the distinct probability that there'll be other crypto ETFs coming behind it. I think the market has a very stable backdrop. It's certainly not feeling like it did in some of the winter bear markets. Um, quite how quite how the halving intersects with what I think will be the new normal for financial markets, where we'll see increased levels of Bitcoin being held by traditional players. I'm not quite sure, but it certainly doesn't feel like there's much negative noise out there at the moment.
Thank you very much. And our next question comes from James. How do you recommend retail investors like us think about crypto as an asset class as part of a balanced portfolio? Should we think about allocating a fixed percentage and rebalancing over time?
Yeah, I mean, you should always definitely not invest more than you're willing to lose pretty much in any financial product, and cryptocurrencies are considered high risk. I would say within the crypto asset space, there are, for example, Archax has tokenized money market funds, which are risk closer to traditional money market funds, which are low risk, whereas cryptocurrencies, the Bitcoins and Ethereum of this world, are classified as high risk. I personally believe that cryptocurrencies are going to be part of the backbone of financial services. Picking the correct one is challenging. You should do your research. You should research from legitimate sources. There are great online communities. I would encourage people to you know, embrace the space as a whole and learn more about it than just what you read in the newspapers, read white papers, look at use cases, experiment in small amounts if you can, and try and understand what firms like Archax are doing. And then if you are going to do it, you should go to someone reputable. Archax is regulated in the UK, other firms in the UK on the crypto asset registered firm. And yeah, maybe consider only investing a small amount of your portfolio. And obviously that differs whether you're a retail investor or a sophisticated investor, but I certainly wouldn't encourage people to invest all of their portfolio in this space.
Thank you very much for that. And the next question comes from Oscar. What cryptos would you invest in for the 5-10 years, for the next 5-10 years that aren't Ethereum or Bitcoin?
Um, yeah, look, these are not Archax's opinions. I would say I'd rather not give specific names, but there are a lot of online data sources now. Archax has actually started producing some, but there are some other good online sources where you can look into the different protocols and you can see the levels of activity. So, giving you some examples, though I'm not necessarily saying you should buy these. Archax's largest external investor is Aberdeen. They're a member of the Hedera Blockchain Council. On that blockchain council, you'll find other significant firms who are building on Hedera. If you look across companies that like Ethereum but don't like the scalability and transaction cost, they're looking at solutions like Polygon and Arbitrum to take advantage of the Ethereum network without necessarily building directly onto the Ethereum network. And then, yeah, I would encourage people to do their research. Don't necessarily be driven by Telegram groups and, Twitter comments, but actually go and do some work into the statistics, look at the people building, look at the projects, see which ones are getting traction. And there's some great sources out there of information. So don't just look at how the price is moving, considering what's driving the price, what the underlying value is, what's the total issuance of tokens, how much is being held by the team members, really looking at these as if they were financial investments and trying to make an assessment.
Thank you very much for that. And next question comes from David. So what are some of the use cases for blockchain and crypto technology is set to unlock in the future you're most excited about that people aren't necessarily talking about?
The biggest one for me is you kind of what is cash? And when I used to work in my last hedge fund to try and give the viewers an example, you used to have this choice. Did you want to hold cash at the end of a day, which means you're taking risk with the bank where you leave your cash, or do you want to hold a money market fund, let's say, that's paying a 5% yield? Now, when you make that decision, if you picked the money market fund, you couldn't use your cash. You were stuck in a fund overnight. And if you chose cash, you could use your cash all day if you'd like, depending if the banks were open, but you're taking bank risk. But what's interesting about putting some of these asset classes on a blockchain is you have the potential to have both together. So what we've done with Aberdeen, and we're working with several other money market funds on, is we've created tokenized versions of those money market funds. So they're always earning, let's say, in the current environment, about 5% based on whatever's in the portfolio. Now, suddenly I have an asset that's as transferable as a stable coin or Bitcoin that I can use to buy something from you, which is earning a yield all the time. And now let's say I buy Bitcoin with the money market fund as I can do on Archax. I buy the Bitcoin off of you. I was earning yield right up to the last minute when I transferred it. And the person that sold me the Bitcoin now has the money market fund. We didn't need cash for that transaction. We were able to pass a yield bearing asset across for a cryptocurrency without taking the bank risk that may have existed before from a cash balance. And I think this idea of collateral transfer for people being able to get extra utility and functionality out of assets they own is a huge thing people aren't talking about enough.
Very fascinating. It sounds very exciting. Um, Thank you for that. And next question comes from James again. So Bitcoin has traditionally been very volatile. Do you think this may change in the future?
Yeah, that's a good question. I'm not sure that I'm not sure that I have a strong opinion on it. It tends to when we get a winter or bear market, the kind of volatility dries up a bit. There's a lot of people that would like to see Bitcoin as the kind of currency of the world that's used for everything. All the time it's volatile. It would be quite hard to pay people to buy goods from shops to transfer it. I don't I think the volatility will reduce in the longer term. I don't think the volatility will go away. I think it is probable that it will behave more like a gold or a commodity of some kinds that people want to own. Whereas I think the kind of, the stable coins are more stable. I mean, they're only stable because they're pegged to fiat currencies. You could argue that the fiat currencies themselves are volatile in their own way in terms of purchasing power as well. So I think it will become less volatile, but certainly I don't expect it to become much less volatile in the short term.
Interestingly, actually, because I was looking at this recently, but yeah, Bitcoin volatility, realized 6 month volatility has been kind of trending lower over time. But I guess, that's the big debate. Should you be viewing Bitcoin more as a digital gold? And gold, for the record, is quite volatile, actually. Or should you view Bitcoin as this payment method? And in that sense, even the slightest volatility is unacceptable, right? And maybe stable coins are the answer here, right?
Yeah, yeah, I'm a big believer in the technology and what the technology can do, and I love Bitcoin as a concept. It's quite hard to think about an economy functioning around the current Bitcoin volatility, but there are certainly some places in the world where Bitcoin would be better. And we're in a privileged position of being in developed markets with well-established currencies, and not everyone in the world is in that position, and there's probably better use cases there. I'm not an expert, but you're right. It's probably more of a use case for payment there than there would be here.
Amazing. Next question comes from Nick. What is your view on the environmental impact of crypto? Do you foresee a way in which crypto can evolve to become close to carbon neutral?
So I think kind of Bitcoin is almost a separate conversation. So a lot of miners that we speak to try to offset the mining that they produce. In fact, I haven't spoken to any for a long while that don't talk about some sort of offset. So I'm not sure what the net impact actually is from those transactions. However, there's no doubt it's better to not cause a problem than to cause it and fix it. That's definitely true. What I would say is if we look at the space as a whole, I remember reading a story one day about every Google search was the same as boiling a kettle or something like that for the amount of processing power it used up. But it makes the world more efficient. If we're thinking that having a stable coin can disintermediate every bank out there, and you start to account for, okay, what's the cost of everyone getting on a train, going into the office, powering on their PC, getting a lift? How do you quite compare that? I think it would be good to get rid of energy usage where it isn't necessary. So, you know, proof of stake stable coins versus proof of work seem to be a better use of the environment. But whenever I got out there and looked at this, there's strong papers written in each direction. So, I think if you're concerned, as some asset managers and institutions we speak to are, stay away from those that you think have a greater environmental impact. But probably the only way to really consider it is to think about the efficiencies it's bringing to the world versus the current carbon footprint of all of those inefficiencies.
Absolutely. And if every Google search is like turning on the kettle, I don't want to imagine what every chat with GPT is. Probably the equivalent of my wife's 30 minutes hot shower every single morning. But actually related to that, there's a good question from Amanish who's asking what part will AI play in the crypto space? He's specifically asking, is it to influence transactions and ease of purchasing and selling? But also curious, Graham, to hear your wider thoughts on how AI could play into the crypto space.
Oh yeah, I mean the AI space is phenomenal. We're actually working with a fund in the UK called Twin Path at the moment that are doing a lot of allocations into the space, and seeing what they're working on, and it's pretty fascinating how it's developing. When it comes to the intersection of crypto, it's not totally clear. You can think of use cases for tokens where you might get to use something like a chat GPT. But at the moment, the way that the places where I see it being useful are two places really: trading strategies. So, consuming vast amounts of data, looking for arbitrage type information. And the other one is on the regulatory side, being able to perform market surveillance, screen wallet addresses, look for types of transactions, to look for criminal activity. I think they're places where you could almost immediately deploy AI to good use.
Yeah, absolutely. I'll throw maybe one more in there, which is um, we have all these plugins that can read and summarize PDFs. So maybe that could be a good way to go over white papers of, cryptos that you're interested in.
Yeah,
And I,
embarrassingly for me, I didn't actually mention how we're using it internally, and you just did. So one of the things, the services we provide to a lot of the large exchanges in the UK is signing off their websites from a regulatory point of view. And some of those clients of ours have over 200 cryptocurrency, and we actually absorb all of the white papers, run them through our internal AI engine, and summarize the results to make sure that they're credible tokens wherever possible. So thanks for the reminder on that one.
That was completely unplanned, but that's cool to hear. That's a very cool use case. Um, that was amazing. I'm afraid that's all the time we have for today. So thank you so much. That was a very insightful discussion. Also, thank you everyone for attending. I hope you found this equally as insightful as I did. So thank you for joining us. And Graham, on behalf of myself, Finimize, and everyone attending today, thank you so much for all your amazing insights.
Thanks so much for your time, Red. I appreciate it,
Thank you, everyone, and see you at the next Finimize event. Bye bye.
everyone.